to this webinar. Oh, the legal framework in Germany. Texas company forms and more to start your business as a part of the Startup Germany Tour 2024. My name is Simone Hermann, and I'm responsible for innovation industry and international networks at the Chamber of Industry and Commerce in Dortmund. On behalf of the organizers here in this chamber, I'm happy to welcome all of you to today's webinar, which gives you a closer insight into your opportunities as an international startup in the tax framework conditions on your way to open up a business in Germany. With our startup tour, we would like to introduce you to one of the most dynamic and attractive business locations in Germany, North Rhine-Westphalia. This way we want you to be prepared for a successful engagement here in our region. Already during the last few weeks, we had informative webinars with interesting topics. This one is already number 9 of this list, but don't worry, all of them you'll find soon on YouTube. The last one will be on Thursday about all the opportunities in the chambers here and abroad. You'll find the link later on in the chat. The Startup Germany Tour is organized by the Chambers of Industry and Commerce in North Rhine-Westphalia, with special commitment of the chambers in the Ruhr area, plus the one in Düsseldorf. And the tour is supported by some important partners like the Ministry of Economic Affairs, Industry, Climate Action and Energy of the state of North Rhine-Westphalia and NRW Global Business, furthermore the NRW Bank and Ernst & Young, or EY, which are also your hosts today. As chambers in North Rhine-Westphalia, we are your central point of contact for lots of concerns about how to start your business in North Rhine-Westphalia, and we're at the same time you're a bridge to other institutions that can help you as well. Just in order to give you a quick overview, I'll share my screen all the time already. Wait a second. Just to let you know what we are capable of in these chambers of commerce and trade. You see it, we have advice on how to set up your business. We can give you an overview of funding, financing your business, customs formalities, foreign trade legislation, and we got a huge access to networks nationally and internationally to 1.2 million member companies and connection to German chambers abroad. And we got intensive cooperation with all partners in the startup ecosystem here in all this region. But I don't want to take too much of your time, so I would like to introduce Christoph Niemann and Nina Reinecke from EY, and they're gonna give you an overview about tax frameworks here in the region of North Rhine-Westphalia. Just let me stop this.
And entire Germany.
And
because
yeah, of course.
not only North Rhine-Westphalia is liable to taxes, it's entire Germany. Believe it or not. Okay, perfect.
Okay, I'll leave the stage up to you now.
Thank you very much, Simone, for the warm welcome. And I would like to say hello from my part and my colleague Nina as well. Hope you can see my screen now.
Yeah, Christoph, I mean, yes. At least I can see your screen. So.
Okay, hopefully the rest can do it as well. So what we are today talking about is about the legal framework here in Germany, talking about some legal forms and taxation here in Germany. So we hope that we have an exciting agenda for you. First of all, some short introduction. Who are your speakers today, and maybe what's your expectation? I've seen we are a smaller group of, I think, at least 16 person today. So if you have some questions or ideas, feel free to put it into the chat, and then we hopefully can answer it afterwards in the Q&A session or even within this session. So we should use this opportunity that we are just a smaller group. So what we are looking about, overview legal forms from a law perspective, tax perspective, we have other structuring possibilities, and at the end we have some takeaways and recommendations before we can start our discussion in the Q&A part. So who is talking to you today. That's myself and Nina, and I would say ladies first. Nina, maybe you would like to introduce yourself? Or?
Yeah, sure. Thank you, Christoph, and hello, everybody. I find it a bit confusing that we cannot see you, but I hope we can follow up on your questions anyway. So please, I just want to encourage you to put your questions and everything you want to know in the chat, and we try to follow up during this webcast. So my name is Nina Reinecke. I work for EY since 3 years, have professional experience for over 8 years right now. I'm advising in the general field of M&A transactions and in particular venture capital transactions. And yeah, I'm here with Christoph to cover the legal part. And yeah, I hand back to you, Christoph, for the taxation aspect. So yeah.
Thank you very much, Nina. Yeah. So my name is Christoph Niemann. I'm a tax director and working with EY for now 15 years. I'm located in Dortmund in the western part of Germany. And yeah, why are we talking to you today? Because we are both part of the EY Startup Initiative. Maybe some words what it is and what's our aim within this initiative within EY. I think EY is for everyone a well-known name, and what we are doing. And the EY Startup Initiative is so-called a cross-service line organization within EY with colleagues from all the different services, from law like Nina, taxes like myself, and of course of the consulting, the M&A part, valuation part, the assurance and financial services. So from all these expertise, people have come together in this startup initiative to help the ecosystem here in North Rhine-Westphalia and even in entire Germany. And I am responsible for the western part here together with Nina. So this is how we are organized in different hubs. We have in the western part, our head quarter from EY Startup is located in Berlin. That's no a surprise, since it's the most common city for startups here in Germany. But North Rhine-Westphalia is a really good location as well. So what are we doing? We're supporting, in a nutshell, all different stages of startups, from the early seed phase up to the exit readiness, IPO readiness, and so we have a huge package of different events and sponsorings like the Startup Germany to here we are talking about today. So this is maybe in a nutshell what we are doing with EY Startup. I would like to draw your attention on 2 studies which have been published by EY this year. One is the EY Startup Barometer and the Venture Capital Study. So if you want to get some insights about the ecosystem here in Germany, I think this is 2 really good studies which have been prepared by our colleagues in Berlin, both available in English. That's maybe important. It's not only in German. So you can find the URL in the header of this page, EY Startup, ey.com. There you can find the studies or reach out to one of us, and we can send you afterwards the PDF file as well. So if you would like to get some insight about financing and what kind of business are in which region of Germany, have a look here. And I think it's a really good lecture. So that should be enough since we have not so much time today. What about that's EY? And so we would like to know more about what are you expecting from this session. So feel free to post your expectations in the chat so that we can pick them up during the presentation or at the end. And feel free so that we can make it a valuable session for all of us, not only for us. We think we have brought some interesting topics, but that we have also your ideas and what's your concerns or your questions with respect to the legal framework here in Germany and taxation topics.
Especially since we cannot see if you're already sleeping, so just try and ticker anything that comes up to your mind into the chat. So, yeah.
Okay. So feel free. The chat is always open, so we are currently looking at it each and every second. But yeah. So
if you don't want to come up with something right now, you can think about something later. We will get back to that in due course, and maybe Christoph, in the sense of time, maybe we should move on then to the first chapter,
here we
which
go.
would be, I don't know if you were planning any introduction or something, but I
No,
think
just start with the legal forms in Germany, and I would like to hand over to Nina for
Yeah,
this part.
exactly. So what I wanted to do is we wanted to give you an overview which legal forms in general are possible in Germany. We have a numerous clauses of legal forms in Germany, so there are not many. I know in Belgium, I think there are about 16. In Germany, it's more than like under 10, so it's very limited. What we wanted to do is to emphasize the most common and the most important legal forms that we wanted to present to you. Obviously, most of you, if you intend to start your business or transfer your business to Germany, then you would have known of a GmbH, you probably have heard of a limited partnership, and you probably heard of a stock operation. And we just wanted to make sure that you know the differences, the main characteristics of each company form. And we start with the most common legal form that startups tend to choose, but also other businesses. It's not limited to startups, but I think a GmbH, the German limited capital company, it's the most common legal form that we find in the German market. Well, what are you gonna do if you want to have a German GmbH? You make a foundation act, you go to a German notary public and have a resolution where you want to implement this GmbH notarized along with the articles of association. And there's one important novelty right now, which came in the course of COVID. Usually for this foundation act and for this notarization, you have to appear in person in front of a German notary public. This is, I think, after 2022, no longer required. You have the possibility of an online foundation. The KYC assessment is still very strict, so you will have to file in a lot of documents for the notary, such as UBO declarations. Some of you might know this because it's common in the European Union, but I know it's not necessarily common in all other third-party states. So this is strict, but it's possible to conduct it on your laptop. So if you don't want to come to Germany in person right away, but just want to implement the GmbH structure up front, that is possible. Yeah, since just recently. So maybe that's one thing that makes it makes it a lot easier to enter the German market. So as regards what is a GmbH, obviously, as the name says, it is limited in its liability. You have to contribute a minimum share capital of 25,000 euros, whereas you have to contribute only half in cash. So if you want to found this company, you have to give to the notary an account statement that indicates or clarifies that you have contributed at least 12,500 euros. And that would be enough to put on this company's bank account in order to have this limited liability company registered in the German commercial register. So this is something to think of. You don't need the full 25,000 euros in cash, but only the half. So what you want to think about as well is that the articles of association of this GmbH, they are publicly displayed afterwards in the German commercial register. So everybody will be able to see one thing is shareholders of the company, the registered share capital, and the articles of association. This is why in the startup universe, you often see that the articles of association are very, very plain and limited to the absolutely legally necessary, and that all the music, you know, plays in the shareholders agreement, because the shareholders agreement does not need to be submitted to the German commercial register. So this is private and kept between the parties. So this is one major advantage of these shareholders agreements. So as regards to the corporate management of a GmbH, you usually have two managing directors, sometimes one. When it's one founder, he's usually also the managing director. what can this managing director do? I mean, he can conduct obviously every daily business, but also unusual business like transfer of real estate, like measures according to the German Transformation Act. But usually what you have as well is a very strong shareholders meeting. It's the main and most powerful body of this GmbH. The shareholders meeting must approve usually many measures, like important measures, like transformation measures, like a change of subject of the company, like a liquidation or something. Usually these measures cannot be taken by the corporate management alone, but needs to be approved by the shareholders meeting. Moreover, when you have the shareholders of a GmbH, they can also instruct the corporate management. They have like the possibility via shareholders resolution to directly influence the corporate management, and the corporate management has to obey. Otherwise, they would make themselves subject to punitive damages or liability claims. So this is very important. The manager, it is quite free on general terms, but still the shareholders meeting has a strong saying in a GmbH. And this is why you see so many investors to claim at least a minimum majority in the shareholders meetings, because they want to use these minority rights in shareholders decisions. So this is probably the background where you see this very often. You often see that investors want at least a minority of 21% in the shareholders meeting, and this is basically the background. The shareholders agreement that we have there, I already talked about that. You find these typical investor rights like drag along, like tag along, like liquidation preference, like I don't know, encumbrances of shares. You would usually find this in shareholders agreements because you don't want to publicly display these details in the German commercial register. However, if any right is not registered in the company's articles of association, and that's a little bit the down part of the shareholders agreement advantages, then you cannot hold it against third parties. So if you violate the shareholders agreement as a shareholder, you would just be subject to liability claims, whereas when the shareholders articles of association of the company are violated, you can claim for a re-transaction, so for retransfer, for example, of illegally transferred shares. That's possible. That would not be possible under a shareholders agreement. So it's always a decision, what do we need to necessarily have in the articles of association, because we want that as a total right, and what would be fine if it could just be compensated by damages claims. So I think that would be the most important fact about a GmbH: limited liability, full publicity in the German commercial register, workaround via shareholders agreements, corporate management relatively free, however, subject to shareholders meetings. So one little detail that maybe we would like to discuss for you for sake of clarity, and because it makes sense when you want to implement holding structures, we have a subform of the GmbH, which is called UG, and it is like a smaller GmbH. It has a reduced share capital. However, you know, it is not so common in the market as a GmbH, but I mean, you could implement an UG like with a share capital of €1, for example. Nobody would make business with you then probably, but you could. It is not, I think, it is not advisable for really operating companies, but for holding structures, Christoph and I will talk to you about that later. It can be fine. It works like a GmbH, with the only difference that you have to, I think, 1/4 of your yearly income you have to like save and put into your capital reserve in order to make it merge it into a GmbH in due course. So this is one requirement. It's fine to have an UG, but for an operating business, like said, probably not advisable. So even though the structure is very, very similar. So if we move over, in contrast to that, we have the German limited partnership. That's very different because it's rather a private company, whereas the GmbH is a capital company. It is also registered in the German commercial register, so you have to file for registration as well, with the difference that not the articles are displayed and neither the shareholders list. So you can see the shareholders, but you cannot see how many shares they actually hold in the company, and you cannot see how many capital they have actually contributed in the company. What is one advantage of the KG in comparison to the GmbH is the transferability of equity, because you don't need these notarization acts. I missed that. If you want to transfer GmbH shares into to another shareholder, you always need to have this share purchase agreement notarized with the German notary public. And if you want to transfer shares in a KG, you can transfer that freely without any notarization act being required. So this is one advantage. The structure of a KG is a bit more complex than a GmbH. You don't just have the company and above it the shareholders, but you have the company. One shareholder is unlimited in liability, and the other shareholder or the other shareholders are limited partners. So their liability will be limited to their capital contribution that is registered in the German commercial register. They can contribute more, but they're only liable until the sum that is entered in the commercial register is reached. So you often see these KG structures in funds, because the general partners usually only give money and don't contribute anything in terms of management or something like that. So the manager is usually the fully liable partner. In order to not create an unlimited liability in private equity as well, you usually implement a GmbH as sole general partner, in order to have the sole limited partner restricted in liability as well. So it's a bit more complex. It can be, I think, Christoph, correct me if I'm wrong, it's also a bit more complex in terms of taxation, but it can be advisable. I mean, whatever you plan, if you're having like a real estate business and you want one manager to be in place and the others only to give cash and to participate in the proceeds, then this can make sense. And then this makes probably more sense than a GmbH, but yeah, so only that you heard of it. It's very common as well. If we move over, and that's just a very brief overview in terms of timing for our session here today. We have this Societas Europaea, that's an European stock corporation. It's common for really bigger enterprises. It has a minimum capital of 120,000 euros, so that's a lot. You have to contribute everything in cash. The advantage is if you have a bigger startup and if you want to have a company form that's IPO ready, then an SE would be, I think, a good choice, because the shares are intended to be traded on the stock market and they can launch immediately. So you can do a listing at any point you want. The same applies for the German AG. It's a German Aktiengesellschaft. It requires lesser capital than the SE, 50,000 euros, also suitable for stock exchange, but not so, internationally, Europeanly focused, but rather focused on the German market, even though, and needs to be traded on the German market, even though you can also transfer the legal seat of a German stock corporation into another member state of the EU. That works. If you transfer it into an already existing other stock corporation in between the EU, you can also found an SE by way of this act. So limited liability, of course, as in I think any stock corporation around the globe. The advantage is the IPO readiness mostly, I think, but yeah, I don't know at which stage you are all in. So if you aim for an IPO here in Germany, that will be the go-to legal form. But if you're just getting started and consolidating the market, I think it would rather be a GmbH or a KG, depending on the business you intend to conduct. So we brought to you as well a brief overview. You can watch it later, maybe about the advantages and disadvantages between these legal forms. I think the GmbH it has no real disadvantages except this transferability of shares. It's difficult. It still requires notarization. Someone needs to appear in front of the notary, a proxy, or you in person. This is difficult. It incurs costs, of course. The notary is not, at least let's say, it's not cheap in Germany. But yeah, I think apart from that, it's the most common legal form. It's it's limited in liability to its assets. You have a very high flexibility as regards to the design of the articles of association. That's a very big difference to the German stock corporation, where you have many requirements according to law that restrict you very much in the design of the articles. Also, a KG, you can also design that very freely, since you do not even need to submit these articles of association to the German Commercial Register. But the sale of shares, it's not possible to just sell the shares to third parties. It always goes along with the capital contribution. I mean, it can be handled. It is very flexible because you can do it inter partes and without any notarization. This is one advantage. Yeah, so I think it just strongly depends on the business. If you want, shareholders that you stay behind and don't want to contribute anything into your business but cash, and don't need any saying into the shareholders meetings, then probably KG would be suitable for you. So right, Christoph, I think that's it from my part.
Yeah.
Yeah.
Thanks, Nina. I will take over. Now we've learned something about the most common legal forms with the GmbH and the limited partnerships, the KG. And I try my very best to explain you now in 20 minutes how the taxation works in Germany. It will be quite tough, and it's an overview. So please, it's a lot of details which are quite complicated, but I think for a first overview, 20 minutes I will have, and I will succeed. So this is taxes you have to observe if you make a business in Germany. The most important ones I've just highlighted here, it's a trade tax. This is some kind of income tax which is issued by the different cities where you're located in. The corporate income tax is some kind of state tax, which this is local one. This is a state tax. And these are the most important ones. I will come up later to these topics. And of course, the value-added tax, everyone who comes from Europe knows that it's harmonized, but this is important for all companies here in Germany as well. The rest here is possible, in particular the last two here, property and real estate transfer tax. This is only if you have real estate here in Germany, then you have to pay attention on this. Payroll, wage tax, I think this is something common. Income taxes if you're personal here, taxed in Germany. So there's a lot of more, but we would like to focus on these three parts, in particular on the corporate income tax and the trade tax, to give you an understanding. What taxes do you have to expect if you're doing your business here, and what else you have to consider in this regard. So first, high-level overview. When are you subject to income tax here? If you have registered your company or legal entity in Germany, you have unlimited tax liability. So all your income you receive with your company has to be taxed, first of all, in Germany. This is quite simple, but there are other possibilities for limited tax liability. For example, if you do not have a legal seat or the place of management here in Germany, you can even be taxed here in Germany with your permanent establishment and operating site. This is good to know, because even a home office employee can trigger a permanent establishment, which has to be taxed then here in Germany. So this is something we have a little bit keep in mind. Not only if you have a company, a legal company like a GmbH or a limited partnership I mentioned here. So even if you're doing business here without a legal form, you are limited, subject to tax liabilities here in Germany. So Now we try to understand the difference between the taxation of the GmbH and the limited partnership, the KG here, because this is quite important to understand. The GmbH, as you can see with this red line here, has to be treated separately. This is the GmbH is running your business and will be taxed. Everything will be taxed on level of the GmbH, the corporate income tax and the trade tax as well. So this is the one thing. Then you have here, see at least 30% tax burden. And if you as a shareholder, even if a GmbH, this is the holding structure we will come on, we will discuss later, or if as an individual, you have to distribute your profits to the shareholder. Otherwise, it will remain here in the GmbH. This is the first thing. So please let me know if we are back on track. Sorry for that, but it was completely shut down. So I think we stopped here. So if you look at the taxation, you have to make this red line between the GmbH and the shareholders. In contrary to the GmbH, the limited partnership here will be treated as transparent. So if you have the income here in your limited partnership, this is reliable to trade tax, but the corporate income tax part is directly shifted to the partners, to the general or limited partner. If it's a GmbH, you have the same situation like on this page. So trade tax on level of the limit of the partnership and the corporate income tax on level of the GmbH. You can also have a general or a limited partner in form of an individual person, and then you have to be treated with a personal income tax rate and can credit the trade tax here on this part. So this is important to understand, because here you can say, okay, I would like to distribute, or if not, I can leave it in the company. Here you directly have to tax the profit on level of the partners when at the end of the year. This is an important difference. The overall tax burden, if you are looking only of the corporate income tax, is the same if you have here this limited partnership only with corporates as a partner. Then you have the trade tax here and the corporate income tax here. It's the same like this one. If you would compare the entire taxation until it's in your personal pocket, then you have to take into consideration the dividend, of course, which has to be distributed here on level of the GmbH. And here, of course, if you are limited, if you're an individual, you have to look what the tax burden is then. I don't want to bother you with a more detailed calculation, but you can trust me, it's more or less the same. Maybe you have a percentage difference in between these two forms. So this does not make the real difference. What can be different, or where you can make some tax saving? I read it in the chat that someone asked for tax saving strategies in Germany. Then you can see here the trade tax, which is subject to the cities, which will be paid to the cities directly. You have seen here a small remark. This can differ. So let's start how the taxable income is determined. First of all, you have to prepare financial statements. I think this is nothing new. You have to do it in every country. Then you have some tax balance sheet adjustment, off balance sheet adjustments. Then you have arrived at the taxable income. This is subject to corporate income tax. This is a fixed rate. It's a state tax, it's a federal tax. So it's 50.8%, including a solidarity surplus. But this is fixed. You can change. This is, of course, everywhere the same. The trade income, there are some modifications first, can differ. As you can see, you have 7% to 21%. And this is at least 14% difference only within the trade tax. So this is an interesting part where you can make some tax savings. So maybe the key takeaway at this part is whether you have a GmbH and co-KG, a limited partnership, or a GmbH, the overall tax burden for the corporate part is more or less the same, somewhere in between 23 and 37%. Normally in Germany, you calculate with 30%. This is before the dividend distribution to the shareholder. But if you're just looking at the trade tax, you have possibilities to save a little bit money, and I would like to show you how it's possible. Everyone who is interested in in countries knows this is Germany, and this is the Germany trade tax map. And the more dark the red is, the more expensive you are. The more expensive is the trade tax, the higher is the trade tax rate. Sorry. So as you can see, all the larger cities, this here is Berlin, this is Hamburg, this is the western part of Germany with the Rhine-Ruhr area, Munich, this is all dark. It's more expensive because each and every city can determine their own trade tax rate. They can say, okay, I would like to have the companies pay 7% or up to 22%. So if you are independent from where you would like to operate your business, and it's for your people who are working with you here in Germany, it does not matter where you are sitting, and you do not need some industrial infrastructure for your business, then you can choose these trade tax cities with a very, very low trade tax rate. So this is a possibility, and you find it everywhere. Even if the North Rhine-Westphalia is very dark here, you have some light at the end of the tunnel. And this is some city, it's called Leverkusen, which is quite next to Cologne. So it is possible, but please, and this is, I think, the most important thing, think first of your business. So look at your business, where does it make sense to locate your business? You need maybe some kind of infrastructure, and your people would like to work there. If you are working somewhere in somewhere of nowhere, maybe you do not you're not able to hire the right people, because the trade tax will be paid in the city the people are working. It's depending on the wages you are paying. So if you are paying the wages in a low trade tax city, I make a list here of the cities in North Rhine-Westphalia, then if they are working here, you pay less. And if they are working maybe in Cologne or in Düsseldorf, you pay nearly the double than in Leverkusen, for example. This is one possibility. If you are free where your people are working and where your business can be operated, then you can choose one of these cheaper cities and you can save trade tax. But please, business first, because if you don't earn money, you don't have paid taxes. This is always the key message. But this is one thing where you can save, really can save taxes. So, okay. So this was in a nutshell the current taxation of corporates and partnerships, and then we have some kind of exit taxation. Of course, maybe you would like to sell your startup, or you have to sell to investors or whatever. Then it makes sense to start with such a structure. Nina, would you like to take over and say some words?
Sure. As regards to the corporate structure of these holding companies, the idea is that your operating business is in a separate company from the company that is holding the shares, and no natural person, most importantly, is holding the shares. So if you have your operative business, like your startup in general, let's say you would use a German GmbH for that purpose, then the idea is to not hold the shares in this operative company directly, but to implement a middle holding the shares in your operative business, and you hold the shares of the holding company. So the idea is, if you want to transfer any shares in the operative business to investors or via an exit, whatever, then the proceeds of such share transfer would not land directly on your level, but first be held on the level of the holding company. And for these cases, like I already indicated previously, for these cases, a German UG is rather suitable because it doesn't require a lot of share capital. It is also like a GmbH limited in liability, and thus it makes sense to have this implemented in advance in order to avoid high exit taxes. And I think with regards to the taxes, Christoph, you can follow up right now.
Perfect. Thanks for this explanation. So this is maybe the taxation of capital gains. The words will appear when you have some exit. This is the GmbH, our startup, and we have to think a little bit vice versa, because this is the shareholder part here, and depending on what corporation or on what if you're an individual, we have different taxation implications when you sell your shares. So this was the GmbH, is a holding structure Nina mentioned before. And if you are a private person or an individual and you have more than 1% shares, so this is normally the case if you are one of the founder or a co-founder, then you have complete different taxation implications. So I would like to compare only these two. This is, I think, enough for today. And there you can see on the next slide what's the difference. So this is a selling company. You are this holding, as Nina mentioned before. And if you are selling shares in a GmbH or in a stock company, this is on level of the holding 95% tax-free. So from these 100 profit from the sale will remain only 5 as taxable income. Then you have your corporate income tax rate, a trade tax here with 14%, depends on the city where you're operating. And then you have a profit after tax of 98.5. So you have only a tax burden of 1.5% at the first level. And then you have less cash out. So you can reinvest your money. You can do whatever you want in this holding. If you would like to distribute it, to have it in your personal pocket, then of course there are some dividends which you have to be taxed on your individual level, and the total tax here is around about 27%. If you are looking at this one here, you're directly as a private or as an individual, you are selling your shares. You have 100 profits. It's always the same. You have, it's called Teileinkünfteverfahren. It's not so important to know, but important to know is that 60% has to be taxed. Then your personal income tax rate, the maximum is 45% up from an income above, I think, 270 or 300,000 euros is the tax rate. So you have 27 taxes, solidarity surtax, and profit after tax of 71. So then you have already the money in your pocket. So you have at least the difference here. The overall difference is not so high. But if you're looking here, you have only 1.5% taxes, and here you have 28% taxes, 0.5. So here you have a huge, larger cash out when selling your shares. If you would like to reinvest, it's much more comfortable to have it in your holding company, and then you can decide what to do. You know, the cash out effect is much lower than selling it as an individual or private person. So this is, I think, the main message we would like to address here. Why such an holding, as we mentioned here, really makes sense if you're operating here in Germany.
And if you intend to reinvest your money, I think that's important too, because whenever you want a cash out, it will be subject to taxation anyway. So
yeah, this is here. The entire difference. If you do it over a holding company or as an individual, this is quite similar. And maybe it's 1%, but this depends even on your personal income tax rate and on the trade tax rate here. So it's just a high level comparison. So you can see, okay, it's nothing that you have a 5 or more percentage more taxes on the one hand or on the other hand. So this is quite similar.
Yeah, so the question that you have to ask yourself is, do you want the proceeds on your private level, or do you want to reinvest the proceeds? And if you want to reinvest the proceeds at any point, then it totally makes sense to implement such a holding structure, since the implementation is also rather cheap with the UG system. So, but maybe that's as a general advice, you should do it, I think, at a very early stage. You have to consider these aspects really early, because otherwise it will be difficult to contribute the assets that you already have tax-free. So yeah, this is one aspect to think about.
Maybe I just had a look at the chat. The multiplier, it could be a little bit confusing. this is the multiplier determines the trade tax rate. So you have to multiply the multiplier with 3.5%, and then you get the trade tax rate. So this is how the tax rate is calculated, and this multiplier will be published by the different cities. So this is just the calculation basis. Important is here the trade tax rate. This is what is your tax burden. This is just the way you arrive here. Maybe hope that answers your question, Samit. So what else to tell? We have 10 minutes left. Losses, unfortunately, most startups start with losses. So it's maybe important to know how this works here in Germany. The good news are they do not forfeit in general. So you can carry forward them unlimited. There's no time limit. They do not expire or whatever. And then if you have suffered losses, you have two possibilities. One is carry back, and the other one is carry forward. Carry back means you can shift 1 million of your losses to the two previous assessment periods. I have an example in the next page, so it's easier to understand. If then tax losses remain, you have the tax loss carry forward, which can be used unlimited up to 1 million, and above this 1 million, 60% of the remaining profit can be offset. So yeah, what is important to know, the carryback only works for corporate income tax, not for trade tax purpose, because the city has their own rules, and therefore it only works for corporate income tax. This is maybe good to know. And this is how it works. Short example, first year you made a profit of 5 million. Normally you have to tax, say, around about 30%, 1.5 million taxes. Then the next year you have 10 million losses. So you can carry back 1 million. This is here the tax loss carry back. And you arrive at the taxable income of 4 million times 30%, 1.2 million taxes. So this is the carry back. Looking at 24 again, you have the loss of 10 million, 1 million you carry back to 23. Then you have a tax loss carry forward of 9 million. Next year, profit making again. We have 4 millions, and then the calculation is 1 million unlimited. You can offset directly. Then 3 million remains. 60% of these 3 million are 1.8 million, plus the million are 2.8 million. So this is the tax losses you can utilize in 2025. You have taxable income of 1.2 million, and this is maybe just to save. There's always some kind of minimum taxation in Germany. How it will be calculated is not so important to know, but you have always some kind of minimum taxation here, even if you have a huge loss carry forward. I have companies with $500 million of losses, and they have to pay each and every year taxes due to this minimum taxation rule. This has been changed temporarily within the new Corporate Tax Law Act, but it would be too complicated. So afterwards, we have 9 million last year, 2.8 million can be utilized in 25, so 6.2 you have still in tax loss carry forward, which will be assessed and will be fixed. Next year, smaller profit, 800,000. You can offset it unlimited up to 1 million, so taxable income 0. This is how it works. The remaining tax loss carry forward will be can be used for the years 27 onwards and will generally not expire. So key takeaway here, we have a minimum taxation in Germany. So if you have tax losses, which are quite an asset, even for investors, if you have losses and are planning profitable business, and keep an eye on your losses. That's the reason I would like to shortly address. These losses can forfeit, even if they are not expire, but if you have a direct or indirect change of ownership of your GmbH, we're talking about the GmbH, not of the partnership, that's a little bit more complicated. But if you have a direct or indirect change of ownership of more than 50% of your shares, which goes to one person or a group of persons with the same interest, some kind of share pooling or something like this, then the entire tax loss carry forward will forfeit. So you always have to have a look if you are selling some shares of your company to one person or to another investor, and it's more than 50%, keep an eye on your losses. This is important because otherwise they can forfeit. There are some exemptions. The most important one is the first one here. It's the hidden reserve clause. So in the amount you have hidden reserves in your company, and it's easy to calculate if you have an investor who is willing to pay something, then these losses can be saved. So saying you have 10 million losses, you have hidden reserves of 5 million, not only 10 million will forfeit, only 5 million, because the rest of the hidden reserves can be used to save these 5 million losses. So this is just that you have heard about it. Losses is always an asset, but keep an eye on if you have a direct or indirect change of ownership of more than 50%. This is important to know. Yeah, then just a quick overview to the value-added taxes. I don't like this tax because it's not so exciting, as I always say, but it's a little bit more technical, and it's important because it can cost you a lot of money if you do not do it or implement it in the right way. So VAT is you have, if you start your business here, and I think in Europe it's harmonized, so it's the same. You have to look at what kind of sales do I have? Are they subject to VAT or are they exempt from VAT? What is the applicable tax rate? Do I have some filing obligations abroad? And keep an eye on your input tax deduction. And this is important also to look at your invoice setup, that you have the correct invoice, because otherwise it can be harmful and expensive as well, and it's some kind of cash flow management. So we have to make some ideas before, and then the second part, which is important as well, is you have to transfer these analysis into your bookkeeping system, because the VAT is something you can easily generate within your bookkeeping. So if you know, okay, I have this kind of sales in my bookkeeping system, this underlying tax rate is correct, or it's tax-free, then at the end of the month, or at the end of the quarter, you can push the button and get your VAT reconciliation, which you can submit to the tax authorities. If you do not have a good organization of your bookkeeping ERP system, then it becomes quite tough and quite hard. And this is the major part when the tax audit comes, that they are complaining about these things and that this does not work correctly. So this is important. And then the monthly, quarterly, or annual VAT returns, it depends on the amount of sales, can be filed easily. So it's no problem, but this is important, some analysis before you start. Do it from the beginning. It's much easier than do it afterwards or backwards. So then, Nina, we have 3 minutes left. It will be tough, but
yeah, right. In light of the time, maybe we could keep it brief. We just wanted to give you some examples for other possibilities how to start a business in Germany. One possibility you probably heard of is the implementation of a branch. A branch is not an independent company, but like a side office of your main business in your home country. This branch is, however, registered. It has its own business seat, and it is registered in the German commercial register, meaning that at least for the implementation, you would have to visit a German notary, that you would also have to go through all the KYC assessments. But then apart from that, it's very easy because you don't need any separate articles of association or anything. But it's still, it's just a branch, so an operating premise, and it's totally dependent on your main business in your home country. So this is something to keep in mind. And I think you would also have to file with the German Commercial Register or representatives and all company statutes from your home country. So this would also be visible here. Depending on the country you're originally operating from, it might be difficult to enter into business with other businesses here across the EU if you only have a branch. I think mostly my experience is that they prefer, if you are really operating actively in Germany or in any EU member state, you should opt for any EU company to be implemented here. Another possibility would be on the next slide, an operating site. It's even less than a branch. It's not even registered in the company's register in Germany. It's rather like maybe a place of production or something. If you manufacture something together with a German company, then probably this operating site would be sufficient and wouldn't require an own company with an own liability and managing system to be implemented. Then maybe you can opt for this operating site. But apart from that, just keep in mind there are possibilities. If you don't need a separate company in Germany, you can have a branch. If you just intend to have like one seat here where customers or business partners can refer to, then maybe a branch can be sufficient in some cases, and sometimes even our operating site, if you manufacture anything, do this cooperatively with any other company, then maybe that could be another option. So much, I think, for that.
Yeah, maybe one remark from a tax perspective. Both possibilities, of course, have to be taxed here in Germany as well, and that's make it a bit more complicated because you do not have the legal entity. Maybe the bookkeeping is less convenient, and this is where you have to look at as well, and that you have the right profit allocated to these operating side or the branch, so that it's at arm's length and the transfer pricing setup will fit the risk profile of these site or operating or the branch. So this is just maybe to know. I think we can skip this. Maybe just at the end, in some minutes, Simone steal us so we can make some minutes extra. What are the key takeaways from today? Maybe the first, if you're looking at the corporate tax, so only it's a GmbH or it's a limited partnership with corporations as a partner, you have an overall tax burden of 32%. That's more or less the same for both. You can save if you locate your business in a low tax city, a trade tax city, but please think business first, because if you don't earn profit, you don't pay taxes, and then you can save taxes. Tax losses, minimum taxation is we discussed shortly the forfeiture under certain conditions, change of control. Please keep this in mind. The holding structure can make sense. We would recommend it to make it easier here to handle shares and exit taxations. Compliance was only at the side note here. Of course, if you establish a business here, you have to file financial statements. If you have a legal entity, you have to file corporate income tax, trade tax returns. You have to file VAT returns, monthly, quarterly, or annual, depending on your amount of sales. So, and don't have a look at the VAT as well. It's important to analyze your transactions and to set up your bookkeeping system accordingly, so that you don't have trouble with this part. So maybe these are some key takeaways from this session. Was hopefully helpful. Maybe we can have a look at the chat. So what do we have? I have a break when I was kicked out of the meeting.
Yeah, sorry.
So how to open a branch?
One important question was that I read was a question that would maybe be interesting for every one of you. If you need a German citizen to be a managing director of the GmbH or of your company, and that's not required, you can have any citizen or any nationality as a managing director in Germany. However, you should carefully pay attention that you do not conduct a transfer of legal seat of this company, because German corporate law requires for German companies that all actions that relate to the operative business and most importantly, the most important decisions are conducted from Germany, from your actually seat of business. And if you do not comply with that regulation, it could come to a transfer of legal seat to the respective country where you're operating. So if you're installing a manager that is not resident in Germany, you can sometimes have hiccups with this transfer of legal seat. So this is just, yeah, something to keep in mind. If you want to install a foreign citizen as a manager of a German company, make sure that the main business decisions are made from Germany. So how to do it, maybe have like an agenda of regular meetings that you take, that you hold in Germany, that sometimes document these things. That's sometimes, yeah, the best way to have it, to have it conducted.
And I had at least one question in my mind, which was from the beginning about exit taxation. Not quite sure if this was already answered, but finally, I think it was if you leave Germany, and it always depends a little bit if you have to tax such an exit from Germany, whether the hidden reserves or the value of the company you have created has been created while you have been seated here in Germany. And then if you want to leave Germany, you normally have to pay some kind of exit tax. If you have been in a foreign country and have your shares here in Germany from the beginning of, Germany never had the taxation right for such a sale. This is always a little bit more complicated because you have to look at the double tax treaty between both countries. But finally, if you say if you have created value here in Germany and would like to shift this value or this profits outside of Germany, and normally Germany says no, you have to tax it before you leave our country, because everything which has been created in value here in Germany has to be taxed here as well. This is maybe a simple rule how you can keep in mind. Maybe there are some exemptions and some structuring opportunities, but you can answer this in general. It's always a very individual case you have to look at.
So we're already a little bit over time, not that much, 6 minutes. But thanks both of you very much, because even this last information, these last slides were so important. I didn't want to interrupt you because it was really important for everybody who wants to come here and open a business, or even stay there and open up a branch here, which is also a possibility. Thanks a lot.
Okay.
And somebody asked if you provide the slides afterwards. Would you give them to us, and then we send them to people, or otherwise we just tell them to watch the later on YouTube link when we are finished cutting the videos.
Okay.
Or could they have the slides? Everybody was here today. Is that possible?
I think the attendees, of course. I think it shouldn't be a problem.
Yeah. Okay, then yes, whoever that was who was asking. Yeah,
Okay.
thanks a lot. And I want to remind everybody who's still in the call to also be there on Thursday when we present what all the chambers here in the region are doing for young companies who come here. Have a nice day and stay on the tour. Thanks to Christoph and Nina. It was very interesting and very informative. I think everybody could learn from that.
Okay, perfect. Yeah,
Good.
thank you very much. And I think we didn't lost too many attendees. Even it's was slightly complex. I think it was a good summary. And hopefully this rough overview was a little bit helpful. And yeah,
you can
enjoy your
always
time.
contact us on LinkedIn or via email. So if you have any questions, reach out. Yeah.
Okay. Perfect. Bye-bye.
Thank you. Bye-bye.